Foreclosures. Foreclosures are still at an all-time high, but also at an all-time high are loan modifications. The pundits are predicting over 10 million loan modifications this year. In this short video, we're going to cover some examples of some of those loan mods so you kind of know what to expect. I'm going to explain why everyone wins, banks and homeowners, and also give you a place where you can view the 22 most frequently asked questions about loan modifications. First, an example. Prior to the loan mod, the interest rate you see 7.875. Afterwards, 6%, which resulted in the mortgage payments going from $5,200 a month down to $4,100 and change. That's an immediate cash savings monthly of over $1,000. Now, the other thing that's particularly nice about this new loan is that $4,100 includes a principal reduction of $800 per month, which grows every single month. So when you really look at it, cash savings and equity buildup is over $1,800 per month. And as a result of that, it goes from a 30-year mortgage to a 27-year mortgage. One other little detail, they were $8,800 behind on their payments. That's current. So let's do the math on year one alone. That $8,800 wasn't added to the loan balance, it was simply forgiven. First you got $1,800 times 12 is $2,100. Then you got that $8,800 forgiveness. You got $30,000 in savings in year number one. Example number two, one of the questions I get all the time is, what happens if I owe more than my home is worth? Well, here's an example of that. Loan balance $356. After the modification, $320 and change. It's a $35,000 savings. Mortgage payment goes from $21 and change down to $12 and change. That's $859 immediate, more money in your pocket each and every month. So you've got $35,000 in equity buildup, $859 per month, and very importantly, they eliminated that nasty negative amortization loan and started at a 4.75 for 3 full years, and then it escalates 0.25% per year until it gets to 6.5 for life. Now, why are big banks and little banks everywhere in America doing this? Well, many of you know that I call bankers idiots, and for the most part I think that's probably still true. However, the banks are realizing that financially it's in their best interest to do a loan modification rather than foreclose. Here are some of the reasons. A foreclosure costs on average $50,000 plus from start to finish, from the lost income aspect, from the legal fees, the foreclosure filing fees, the repair costs to the house usually, and a bunch of other things. So foreclosing is an expensive proposition for the bank, and the bank must put money into cash reserves to offset the fact that they've got this foreclosure in their inventory. Then they've got to fix and resell it, pay the commissions to someone. So from a cash flow perspective, a bank is much better off working with a homeowner, modifying their existing loan, and their balance sheet looks better, which is how they borrow money. From a homeowner's perspective, advantages for the homeowner. Let's look at them. First off, if you're dealing with a reputable company like ours, the evaluation to see whether you even qualify for a loan modification is free. Loan mods don't affect your credit, and the interesting thing in today's marketplace, loan marketplace, is that you can actually get a better rate today with bad credit than if you have perfect credit because of the attitude of the banks. And having a law firm negotiate for you certainly doesn't hurt. So the stress relief, knowing you don't have to pull the kids out of school, knowing you don't have to explain to the people at church why you're leaving. How about having a mortgage payment you can live with? Now, people ask me all the time, can't I do this myself? And the answer is absolutely you can. You can also do your own brain surgery and pull your own teeth if you want to. Many of you know that I'm not fond of most attorneys, and that's true, kind of like bankers. However, attorneys do have their place, and this is one of them where they're a perfect fit. What about past due amounts can be forgiven? You've already seen examples of that, and examples where loan mods or loan principal amounts can be reduced. Go to Loan Mods or Us. I'll give you this address at the end for all of the FAQs about loan modifications, how you qualify, what it is, how Obama's plan, the HASP plan, affects you, why you have to have a hardship letter, is it the same as debt consolidation, debt settlement, and why, again, why you should use an attorney. This is one of those things where time works against you, so I would recommend that you hop on the internet, check it out, see whether loan mods are something that makes sense for you to explore. This is the website. This is what we do. We've got 9 law firms nationwide. We have, if we accept you as a client, a 97% success rate, and there's no upfront fee to see whether or not we'll accept you. If we do and we can't do our job, we give back your money, so there's very little at risk here. Here's all my contact information, which I'll give you again in just a moment. Choices are pick up the phone, scream at the banker, talk to the person that doesn't even speak English at $8 an hour and see what you can get done. A lot of people try that. God love you if you want to do that. You're welcome to. You certainly can. Other scenario is let one of 9 law firms pick up the phone and talk to the vice president in charge of funding. Who do you think is going to get the better result? Well, do the math on it. Loan mods are us. That's all the information. Check it out. See if it's something to consider. There's never been a better time in history to get a great mortgage rate, even if you don't have good credit. Shouldn't be like that, but that's how it is. Check it out. Thank you for your time, and may God richly bless you and yours today.